Welcome back, traders. NVIDIA broke through the resistance level we've been watching, and all eyes are on whether it will follow through. Also, healthcare's monster pop on Pfizer's White House handshake turned heads. But with job openings nudging firmer and manufacturing PMI lurking tomorrow, the week's got that undercurrent buzz begging for our pattern spotting lens. You're tuned into the Stock Market Summary Series. We're going to get into what we're seeing in the charts, but before we do, as always, none of this is buying or selling advice. We're just here to provide some market commentary and updates in a fun, distilled way. And hopefully you can glean some free trading education along the way.
That's right. Just remember that none of this is buying or selling advice or financial advice of any kind.
Hey, if you're liking these videos, do us a solid, give us a like. We'd really appreciate it. So today, September 30th, it kind of felt like a win for the bulls, didn't it? A bit of a clawback.
Yeah, definitely. Markets chopped around a bit early on, tested some key spots, but finished strong near the highs.
Right. SPY, the S&P 500 ETF, it closed up 0.38%. Importantly, it's still holding nicely above that rising 20-day moving average.
And that technical picture was pretty consistent. QQQ, the NASDAQ, up 0.27%, steady. But I thought IWM, the small caps, had the really interesting move.
Oh, yeah. What stood out?
Well, it gained 0.14%, but how it gained it bounced like perfectly off its rising 20-day MA.
The textbook bounce.
Exactly. That moving average was the lifeline. Tells you buyers are, still defending that level.
Yeah, that 20-day on the small caps is always such a tell for risk appetite, isn't it? Okay, let's talk NVDA. We've all been watching that $184 level.
We sure have.
And today, boom, clean break above $184.50. Looks like a classic ascending triangle breakout. And crucially, you saw that volume spike.
Right. That's the coiled energy we mentioned last week finally letting loose, that pressure building up for weeks.
So the pattern's complete, but what's next?
Well, this is where it gets interesting. The breakout's there, but now you absolutely need that follow through, especially on volume, sustained buying interest.
Because if it fades back below $184.50 quickly, then it's a potential failure, right? The market often comes back to test that breakout spot. So watching tomorrow's close is pretty critical here.
Good point. Oh, he's shifting gears to sectors. Healthcare, XLV, wow. Rocketed up 2.41%. Huge leader today.
Yeah, that was all about the Pfizer news, wasn't it? The White House handshake on drug pricing seemed to ease a lot of those regulatory fears hanging over the sector.
Definitely a policy-driven move. And then you had the opposite story in energy, XLE.
Yeah, big lagger, down over 1%. Still feeling the effects of that fake-out flop we talked about last week.
But even with sector divergence, there are setups forming. You flagged Oscar Health, OSCR.
Yeah, OSCR. It's tracing out a pretty classic reversal pattern right now. Looks like a cup and handle bull flag.
Okay, let's break that down quickly. The cup and handle, stock bottoms, rallies to form the cup shape, then pulls back shorter, kind of sideways. That's the handle.
Before the anticipated next leg higher. And what's interesting on OSCR is you're seeing volume picking up again right here in this handle phase. That volume confirmation is always key.
It is. But, there's always a but. Health insurance stocks like OSCR, they can be super sensitive to policy headlines, right? So even with pharma breathing easier, is that bull flag worth the regulatory risk still kind of swirling around?
Good question. It really highlights the importance of timing and risk management, doesn't it?
Exactly. When you're trading patterns, whether it's NVDA's breakout or OSCR's flag, getting the timing right and having your risk defined, that's crucial. And honestly, that's a big piece of what we focus on in the Grok Trade Mentorship, teaching traders how to spot these setups and manage them with discipline.
Makes sense. Hey, speaking of watching stocks, as always, guys, if you've got a stock you're watching or a question about the markets, drop it in the comments. We might cover it in an upcoming episode.
Yeah, we love seeing what you're looking at.
And by the way, if you're enjoying this video and appreciate these market summaries, do us a big favor and hit that like button. It's totally free and helps us out in a big way. And click subscribe, too, so you don't miss a beat. You can always unsubscribe later. Okay, quick look at the economy. We got the Joel Tease report, job openings for August.
Right, came in at 7.181 million, just a little bit higher than the 7.1 million consensus.
So labor demand's still pretty firm then?
Seems like it. Still humming along. And a strong labor market, well, that keeps things interesting for the Fed's rate decisions, doesn't it?
Absolutely. And that leads right into tomorrow, October 1st. Big one. ISM manufacturing PMI.
Yep. That'll give us a real pulse check on the factory sector's momentum or, lack thereof.
Plus, those DC shutdown whispers we mentioned last week are still kind of floating around in the background. Always adds a layer of uncertainty.
True. Quick check on crypto and metals. Crypto cooled off a bit, Bitcoin's kind of flat, but it's holding tight between its 20 and 50-day moving averages.
So the bias is still open there.
Yeah, we're watching that weekly chart. Looks like a bull flag consolidation still. Could see a decisive move soon. Metals, though. Gold, GLD, up 0.85%. Extended that hedge-like streak.
In silver.
SLV slipped just a tiny bit, but still holding that safe haven sort of feel.
So bringing it all together, days like today with these really specific technical events, NVDA breaking out, OSCR flagging, IWM bouncing off the MA.
It really hammers home why having that professional edge matters, doesn't it? Being able to spot these things in real time.
It's about giving you, the listener, the tools, right? The skills to see these patterns, time the entry, and manage the risk tightly. That's really the heart of the Grok Trade mentorship.
Yeah, providing that hands-on coaching until you've got the confidence, until you've recouped that investment through better trading.
So wrapping up today, felt like a quiet confirmation maybe. Technical levels held, we saw that policy pop in healthcare, and the labor market's still solid.
Seems about right. A mixed bag, but the technicals held their ground.
Okay, final thought for you all. With NVDA breaking out, what's your take? Is this trade getting too crowded now? Or do you think maybe $200 is the next logical target? Let us know in the comments.
Curious to hear your thoughts.
All right, everyone, have a great rest of your day, and we'll catch you in tomorrow's market summary.